this final panel, the idea is to take it kind of from the very high macro down to the more specific reforms that we're expecting. So let's see, we're going to kick it off with Lu Feng, who has been here, I think, every year that we have had that, and we've had the program. He's a professor at the National School of Development at Peking University, and despite the fact that you got your PhD in the UK, we have a high degree of respect for your views. Of course, I should say that you got your degree at the same place where my daughter did, so that's great. But you know, you'll kick it off, and then we'll go to our other two panelists.
Okay, thank you, Steve, and let me to express my more personal opinion as a minority. As mentioned by Steve, oh gosh, I don't know what, oh yes, come back. As mentioned by Steve, I have been assigned the job to talk about macroeconomic situation in the last 4 years, similar this year, okay. And last year, I said China economy were towards a stabilized growth. 2 years ago, I said China can sustain a relatively high growth rate. This year, I think China is likely to maintain steady growth in the current year. Fortunately, my discussions or predictions has been largely being consistent with the actual performance in recent years. As indicated by the chart, oh gosh. As indicated by this chart, the recent economic growth pattern has been highlighted by this two phases of growth pattern. The decline of growth rate since very high level at the beginning of 2010 stopped at the beginning of 2012. Okay, then the growth rate has been stabilized around between 7.5 to 8% over the last 2 years or so. Okay, this year the growth rate is most likely to be around 7.7% last year, 2011. So growth pattern, I think the growth pattern in recent years has been shaped by various factors, okay. Among them, I think among them, 5 variables are noticeable. First, the number one, the slowing down of the potential growth rate, which has been widely acknowledged inside and outside China. Secondly, China has to deal with the so-called over-leverage and excessive debt. I will come back to that issue later. Thirdly, China have to cope with overcapacity and the environmental pressures. Fourthly, and China faced sluggish the external demand in recent years. Finally, very in Chinese characteristics, China have to face the situation of the rectification of full winds, okay, on luxury consumptions as part of the campaign to improve national government governance by the Xi and Li of the new leadership. Okay. So this year, I think this year the growth pattern, the structural factors I mentioned above will continue to play their role. But I think 3 factors or variables will be important or crucial in determining this year's growth pattern. First, as an open economy, China's growth performance has been always influenced by the external environment. But fortunately, this year so far, and now we expect, it has been widely expected that the global growth rate will be marginally improved. So that will provide favorable external environment for China. Secondly is the impact of fighting against the pollution, which has been discussed in the previous colleagues just now. Though the problem is not a new one, it has been a structural one, okay, for a rapidly growing economy like China. But the worsening situation highlighted by the growing of the frequency as well as seriousness of the so-called PM 2.5 has been indicated urgency, growing urgency in this area. So that is some pictures in the website about the problem in China. It has been widely covered and discussed intensively in the media inside China as well. Okay. So the environmental protection is likely to gain even higher priorities in the new government policy agenda, which will implies, two sides of effects on short-term economic growth. On the one hand, greater emphasis on environmental protection will encourage investment in environmental areas that may play a positive role for the economic growth in China. On the other hand, tightening up of regulations on pollution, emission, will inevitably to increase or internalize the external cost for firms, which will impose constraints for China's economic growth. Thirdly, I think it has been widely agreed short-term economic growth in China will be crucially influenced by the macroeconomic policy stance by the new government of Xi Li. The prudent macroeconomic policy demonstrated in last year's macroeconomic management practice have two balanced goals to my personal observation. One goal is to highlight pro-growth objective, which means that Chinese government will continue to maintain reasonable economic growth rate speed as the priority. Secondly, maintain reasonable growth of employment as the policy objective. Finally, to emphasize maintenance of financial stability in the financial system. But on the other hand, China macroeconomic policy also highlight the stability or sustainability of the economic growth, which indicates or covers three elements. First, be alert and avoid bad hangover of stimulus policy, which has highlighted in the recent policy document in the working conference of the Central Committee of CPC. Secondly, emphasize on quality and the sustainability of economic growth. Finally, highlight the objective to control public debts through orderly and gradual deleveraging. I would like to take the chance to mention, the recent result has been announced by the China's national the audit office at the end of last year, on the 30 December last year. On the basis of that information, most cutting-edge information about the comprehensive debt by 5 levels of governments. In comparable terms, the local government debts in 3 local government debts has been increased, something like 2/3 over a period of 2.5 years after the similar results, audit results was announced by the end of, conducted on the end of 2010, So that converted into 22.8% per annum growth rate for the local debts. So generally speaking, on the basis of the most updated information about China's public debts, the current debt ratio for the whole government, the 5 levels of governments, is something like 53 to 55%, which is still manageable. But the recent years' growth pattern or growth speed is obviously not sustainable. So as emphasized in the economic working meeting of Central Committee of CCP, the control and the gradual reduction of the local government debts will be a major task of the economic policy this year. Okay. That table gives us summary of the projection of growth rate for China this year by selected international organizations such as the IMF, World Bank, OECD, as well as a few dozens of market institutions. The projected growth rate will be a range between 7.3% to 8.2%. Okay. So my personal prediction will cover 3 points as my last slides. Okay. First, number one, I think Chinese economy this year is likely to maintain steady growth of 7.5% to 8% in real terms this year. Number two, China is likely to maintain steady growth at around 9% to 10% in nominal terms. Okay. Number three, China is likely to maintain steady growth at around 12 to 13% measured in US dollars in total economic size. Finally, China is likely to maintain the status of the biggest growth contributor to the global economy. Okay. That last year, incremental growth of China's GDP measured in US dollars is something like 950 billion US dollars, which is equivalent approximately 30% of estimated global economic growth. I think China is likely to maintain the status of the biggest contributor to the global economy this year and many years to come, as discussed frequently in my previous discussions in this occasion in previous years. Thank you for your attention.
We'll now hear from Huang Haizhou on the outlook for the markets. He's the managing director of CICC, I should say, and like 235,000 other Chinese students today. He was one of the predecessors and got his PhD in the United States.
Okay, good morning. I guess that my job is easy, which is to provide prediction on the market. Okay, so I think that that probably I will give some interesting prediction. Lu Feng already discussed about the macroeconomy, and before him, Justin Lin gave an excellent speech and on the broader perspective of the market, and Chairman Qin discussed on the political dimension and the social dimension. So I will show you a few slides, and then basically I hope that we have time for discussion later on. Okay. This is a slide I think that I don't want you to remember. Okay. The next slide I want you to remember. This is really that if you look at the index of major stock exchange, including New York S&P, and the DAX index and the Japanese index and Chinese index. The starting point is March 2009. The global market started rebound on the 9th of March 2009. That's exactly the date that during the last crisis, the global market reached the bottom. So in a way that if you look at the performance, the Chinese market is not one of the outstanding. Frankly speaking, the Chinese market at that point did not move much, if anything moved down, okay? Next slide, I think, is probably worth $10 million for investors. I think that I want you to come back to that hopefully next year, or hopefully when you come back, you want to bet against Justin Lin. This is a slide you really want to keep in mind. This is basically a slide, if we go back to basically about from 2001, okay? If you look at the, I plotted two curves of index. One, of course, is the S&P 500 index. The other is the Shanghai Composite Index. From 2001 to roughly 2004, while the US market, after the crash of the Nasdaq bubble, start to inch it up, with the Federal Reserve cut interest rate 11 consecutive times, the market started rebounding in the United States for 4 consecutive years. The Chinese market did not move much and actually, if anything, came down somewhat. What happened after basically that 2004? Basically, from the first half of 2005, the Chinese market started to catch up again. Okay, basically over the 2-year period of time, the Chinese market managed to, more than catch up, basically overshoot on the U.S. market performance. Okay, that's basically that we already knew what happened to basically that end of 2007. Now, I think that after the 2007-2008 crisis, of course, the Chinese market came down together as the U.S. market. From March 2009, as I said, the two markets drifted apart. While the U.S. market started to have this steady recovery, the Chinese market drifted down somewhat. It has been about 4 years' time by now, from March, basically, that 2009. I think that the $1 billion question, at least was $10 million question, is when these two markets will converge. Okay, I think that after the successful session of the third Plenum meeting, convergence is coming very soon. Okay, although we cannot pin down precisely when it will start. I hope that next year, when we have the session here, more or less same time in New York Stock Exchange, a lot of people will realize that if anything, the convergence will start in 2014. Okay, that's if you only want to take away one slide, this is the slide I want you to remember. Okay, that's. I want to spend a little time talk about the macroeconomy, largely reiterate what Professor Lu Feng has said. In a way that if you think about the economy, really that the investors have basically downgraded expectations for the Chinese economy for the last 2 to 3 years. Justin Lee mentioned that last summer, I was also here in Wall Street meeting clients. I think that there was so much worry about where the Chinese economy would be. I think that Yiping has put this in a very nice way, which is that you probably never want to bet a Chinese economy to have a hard landing. I think anyone bet on Chinese economy have hard landing probably would not get much pay out of that. To us, I think that we see that there is somewhat upside risk of the Chinese economy, i.e., we think that things already stabilized, okay? I think that from the market perspective, you think about growth, probably the lowest point was roughly summer last year. I think that that's really is behind us. So if we think about the Chinese growth, I think that this is the CICC forecast. We believe that for 2014, our forecast for China's growth is 7.6%. Although it's probably much harder to forecast at this point of time about the government target, but this is what we believe that this is the growth will probably will realize. If you think about the problems in China's economy, I think that Professor Lu Feng mentioned a few. I want to irritate some of that. I guess that the supply side is not mainly the problem. There is, if anything, there is a lot of excess capacity in the economy, and that excess capacity will need to be digested sometime soon. If we look at the financial sector, or the real sector, I think that there is this interesting phenomenon, which is that in some sectors, we really have, in a way that real interest rate maintained very high. Okay, I think Chairman Chin wrote a very nice article on this, which is that, largely in China, I think the financial sector, there's not enough liberalization. But in some small sector, there is too much liberalization, frankly speaking. So we plot a real interest rate. As you can tell, that the real interest rate for property sector is negative. Okay, real interest rate for consumption probably is more or less right. Real interest rate for the manufacturing sector is too high. Okay, that's really the China's problem. The transition is still continue. And in terms of the real interest rate allocation to different sectors of the economy, I think that some sectors got too much subsidy, other sectors are basically robbed off. Okay, that's really is an important issue. I think that financial liberalization will have to address those issues. Over the last few years, I think that last year in particular, I think renminbi appreciation also in a way hurt the growth, in particular in the real sector. I think that this basically, this is a simple plot of the the value of export and versus the renminbi. I think that by and large, I think the market would believe that the exchange rate is pretty much there. Equilibrium exchange rate is more or less there, okay? If anything, if you look at the last year, the market, two-thirds of the time, the market price renminbi would depreciate. That's last year, okay? The only appreciation pressure came after September last year. Going forward, we see that there is a stabilization to growth for factors that Professor Lu Feng already discussed, so I would skip this. But I think that in terms of the structural reform, I think that I also would quickly skip this, but I think that really that one thing I want to highlight is really that the new opening of MOF started with the Shanghai Free Trade Zone. Okay, I think that the other sectors, I think Professor Lu Feng and Professor Justin Lin already talked about, including reduced state monopoly, tax fixed reform, and interest rate liberalization, so on and so forth. I think that probably the market will keep its eye on this new urbanization and land reform that will start this year. I think that the relaxation of family planning policy, that's also something important, and I think Yiping talked about this. In terms of A-share strategy, I talk about the A-share market, I talk about the H-share market, then I conclude. I think that this is the CRCC's view. We believe the A-share market probably will deliver 20% annual return in 2014. 20% is not that great in a way, but really that if you think about that the catch-up will start from 2014. As a starting point, that's something significant. If you think about the return of the Shanghai Composite Index, measured by Shanghai Composite Index, over the last 4 years, they're all negative. Okay, so that's why that I think 2014 would be a turning point. I hope that we will get China right. Okay, we think that the earnings probably will, Asia earnings probably will grow about 15%, 15.2%. Okay, and we have a suggestion for a few sectors. I think that I will come quickly to those sectors. First of all, I think that we suggest sectors that basically that have been so much underpriced. Okay, that's including potential reversal of the deeply cyclical sectors, including steel, cement. Okay, I think that we have reported in this machinery. I think that the second sector we want to focus on would be this SOE reform. SOE reform, I think that despite it's still quite hard. But if you watch the market closely, the Shanghai government already issued a document on this. Other municipal government, provincial government probably would be issuing their own document. So basically, there is competition at the provincial level and municipality level. So I think that with such competition, I believe that there will be important dividends to be delivered and by the OCE. Okay, the third area. Largely, we focus would be on the merger and acquisition. Okay, I think that the chairman of CSRC in his speech over the last weekend strongly support this. Okay, I think that this is a very important thing that we believe that will deliver a decent return. The fourth area we want to highlight is wireless and internet applications. Actually, some of those companies actually came to New York to be listed in NASDAQ and New York Stock Exchange. And some of them will be listed in Hong Kong, in mainland China, Shanghai and Shenzhen. So, but as a sector, I think this is a very important sector. We continue want you to watch for. For H-share strategy, again, roughly we also see about a 20% again in 2014. Okay, this is for this year. And in terms of valuation, I think that we think that the valuation expansion into 2014 probably would be a key driver into this area. And in terms of earnings growth, we see about 15% growth into 2014. I think that the interest margin in various sectors will continue to expand. Our H-share sectors, the Peking of the sectors are slightly different from the A-share. For example, this SOE reform, we do believe that H-share sector will continue to be, that's an area that we should watch for, but in terms of the merger acquisition, probably H-share sector would not be as important. Okay, So we think that the earnings per share reduction, in a way, will unlock value and induce valuation normalization. So valuation normalization will be key to watch for the H-share market, okay? We have detailed, this you won't be able to read, we have detailed sector choice, but I probably want to remind you, this is a figure that I showed you last year, also at this podium, okay? This is basically that last year, before the third plenum session, there was a lot of worry about where China's economy will be heading, okay? We believe that the next major wave of reform will be coming up. I believe that after the successful conclusion of the third plenum session, quite clearly that the next major wave of reform is just behind us, okay? With that, we believe that growth would stabilize. We will see another. If you think about mountain, we think about the fourth mountain will be in front of us, okay, and that could last maybe 10 years or maybe longer, okay. This is really, I think that will give us hope for the market, and also that if anything, I think that next year, I hope that I can remind you. I can remind this important figure. Thank you so much.
I love the specificity. And I love that we're going to hold you to it next year when we hold this conference at the same time. So I like going out on a limb like that. The third presentation is going to be from Mingchun, who is the chief economist and founding partner at China Broad Capital, which is an equity hedge fund based in Shanghai. And I think it's your first time joining this forum. And you went to you got your PhD at some unknown university in the West Coast, which I think goes by the name of Stanford.
Thank you very much.
Our chair got her degree there too, right?
Good morning, everyone. So very happy to be here. This is, I think now it's past 11:30, so I'm sure you are very hungry. To be honest, I am. So I will not keep you too long. One thing I want to say that before you open your lunchbox, I'm going to open a can of worm for you, because the two topics I will discuss are both very controversial. The first one, shadow banking, I'm sure you know this in China, shadow banking. This is a topic that kept investors awake over the past few years, China investors. Actually, last night, I was kept awake by the A-share market, which dropped by 1.8%. So in 2 days' time, A-share market, in the last 2 trading days, the A-share index dropped by 4 percentage points. Why is that? A lot of reasons. But I'm sure one of the factors behind that is shadow banking. Because there was some rumor that a new regulation was being introduced a couple of weeks ago. Normally, the rumor always proves right. So no matter what happened is people are still very worried about shadow banking. Many people worry that the shadow banking will implode, the system will implode. Or some people worry that if we continue to regulate, if we shut down or reduce the funding capacity provided by the shadow banking system, then the supply of funding for the real economy will be less, and the growth will be affected, interest rate will be higher for the real economy. So there are this kind of worries. To me, what I will show you later is that I'm not so worried about this for the next 1 year, this year, maybe not next year as well. But I do think this is a big challenge for China between 2016 to 2018. The second topic I'm going to talk about is internet finance. I guess not many people realize what is going on in China today in this space. We are seeing lots of momentum in this field over the past year, especially in the past 6 months. A lot of people are very enthusiastic about the future of online financial services in China. But also there are lots of people doubting about the future of that. I don't have a strong view on that. I'm trying to provide you some fact and provide you some food for thought. But let's go into that. First, I think let me see how I can get back. Okay. The first difficulty we have in terms of, in this debate of shadow banking is the definition. We don't really have a consensus definition about shadow banking. So what I'm doing here, I just take the central bank's definition of social financing aggregate, and I take out the more traditional financing channels like bond, bank loan, and equity financing. The remaining, I call that shadow banking. So this is the one definition I use. By using this definition, you can see shadow banking is about 20 trillion in total. The stock of financing provided by shadow banking system is about 20 trillion. You can see from the chart on the left, it's very clear, bank loan still accounts for 2/3 of the financing in China. Even though back in 2002, that share was like 19%, over 90%. You can see how fast the share dropped for bank loans. The gap was actually filled out mostly by the shadow banking system. Some people say your definition is probably too narrow. You probably need to include more of the shadow bank activities. Okay, I tried another definition, which gives us about 24 trillion. And some people have other definitions. The highest estimate I have seen, is about like 30 trillion, which is 50% of GDP. 50% of GDP, I don't think is really a big concern, because if you look at the more developed market, including here in the US, it's probably around 100% or even more. So the stock of this system, shadow banking system, is not really a problem in my view, like the local government debt problem that Professor Lin talked about. But what is alarming is the growth rate, as you can see from chart on the right, is growing very fast. So that's why I'm not worried about this year, next year, but I'm more worried about the future. So why China's shadow banking system grows so fast? I think it's mainly, because of two reasons. One is overinvestment. The other is excessive regulation. Overinvestment, this is, I'm sure you know all about overinvestment in China. Just show you the chart on the left. This is a very important chart. I also think you should remember this. You look at China's fixed asset investment. This is annual amount of fixed asset investment versus annual loan growth, annual new loans in the economy. In the past 11 years, the amount of investment increased by 11 times. The amount of loans increased by 4 times, 5 times. So there is the gap. The financing gap is becoming larger and larger. Of course, a large portion of that gap was filled by corporate earnings, return earnings. Some of that was done actually by fiscal money. But overall, that's probably only half of the total amount. So there is a big gap between the financing need of the economy and what the formal banking system and the corporate sector can provide by themselves. That's caused, the demand for shadow banking system. The other reason is excessive regulation. If they can't borrow from banks, where can they go? Can they go to the IPO market? The IPO market was shut down for over a year until today. It's still shut down. It's going to be open very quickly, very soon, but it's still shut down. The bond market is very small in China. Local government, are some provincial government only have some minimum a maximum amount of 300 billion, 400 billion local government bond issuance quota. There's no municipal bond yet. Property developers cannot use the equity market for financing for many years. Local government financing vehicles, they were not allowed to borrow from banks anymore. So where do they get the money? Somebody need to give them money. So that's, I would say that, one more thing I want to say here. The bond market in China, why the bond market in China did not grow very fast? It's mainly because we need to get government approval for corporate to issue bond. So that forces the borrowers to use this shadow banking system. So what's the risk? What's the problem of borrowing from shadow banking system? Interest rate is very high. You can see from the chart on the left, if you borrow from banks, you'll pay 6-7%. But if you use shadow banking finance, you probably need to pay, you have to pay, I would say, double-digit interest rate. For some, it's actually over 20%. That's concerning, I think, because not many projects can have such high returns. The future, what would happen to the shadow banking system in the future? I would say it's going to become even larger because we can do a simple estimate of China's loan growth and investment growth in the next few years. In the past decade, China's average growth rate of investment is about 25%. Last year was 20%. I think, let's say this year we got 18% growth, next year 16% growth, and 14 the year after, 12 the year after, and 10% by 2018. We still need to invest 340 trillion RMB, 340 trillion RMB, nearly 70 trillion RMB per year. What's GDP for China last year? It's less than 60 trillion. So how to finance this 340 trillion? Let's think about the bank loan growth. Bank loan normally is less than 10 trillion per year. Let's say in the next few years, you can see I actually have a pretty aggressive estimate or assumption. It can only provide less than 100 trillion. The corporate sector, fiscal money can provide more money, but I still think there must be 50 to 100 trillion gap. We have to develop bond market or equity market. Otherwise, we will have trouble, in financing the necessary investment. Because think about my assumption for 2018, 10% investment growth for 2018. If we can't even get that, how can we imagine China GDP growth can get 5%? Investment is half of GDP, we all know that. So this tells me we have to develop a multi-layer capital market, a multi-channel financing system in China. We have to allow shadow banking system to grow. That's why I would say, my personal view is that I don't think shadow banking is a vicious thing. A lot of people think of shadow banking in a negative way. I don't think it's negative. I think we need to have more financing channels. The economy cannot rely too much on the bank loans. But on the other hand, we have to develop bond market, equity market as soon as possible. So that's something urgent, I would say. And also I have to say, over the past few years, without the financing provided by shadow banking system, we would have already got some hard landing in China. We won't be able to get 7.5% or 8% GDP growth in the past 2 to 3 years. So it has some merit, I would say. But of course, we have to make it more transparent, more institutionalized, well monitored or better regulated. The risk is mainly, of course, credit risk. I don't need to mention too much about that. But the most urgent risk today is liquidity risk, because most of these financing have maturity mismatching problem. They use very short-term loans or financing tools to finance long-term projects. So that's their problem. I would say in this year, there must be some credit problem, some default in this space. We need to have some default to normalize the credit spread. We don't really have a good spread in China today. We need to have that to set up a normal yield curve as well. So I think we need to have some problem, need to have some default, you know. But on the other hand, I don't think a systematic problem, a systematic implosion is likely in the next 1 or 2 years. So mainly because I think one thing I want to say that most of these borrowings have very good collateral, and there is a very high, very big discount or haircut in the collateral. So that's one big cushion, I would say. And also the government still has a lot of financial resources and also, I would say, wisdom to solve the problem. But on the other hand, as I showed you earlier, that chart on investment, what's going to happen in 2016 to 2018? If we can't develop bond market, equity market fast enough, then we will have a much larger shadow banking system by then. If we still have all these maturity mismatching problem, that's probably beyond the control of the government, I think. The solutions, I think, is pretty evident. We need to slow down investment growth. We need to introduce more financing tools. We need to develop bond market, equity market. So I won't go too much into that. Internet finance, I probably don't have enough time for that, but just want to let you know, I know in the US, there are not many activities. It's not a new phenomenon, but in China, over the past year, especially in the past 6 months, we have seen a lot of activities in this area. Internet companies are entering financial business in a very aggressive way. You can see from this chart, for all these business activities in the financial area, like online payment, online lending, wealth management, online trading, insurance policy issues, all these, we have seen 2 groups of players. Those in the pink box are the traditional financial institutions like banks, insurance companies, brokers. And those in the green boxes, they are internet companies. You can see how many of them are doing this business. And many of them are actually achieved a lot in the past 6 months. So some people say, these internet companies is going to overthrow the traditional financial institutions in the online financial business. But others say, that's probably just a hype. I don't know, as I said, I don't know, I don't have a strong view on this, but I want to show you some data. So you can see from the chart on the left how quickly the number of Chinese people are using online shopping, online payment, and also online banking. This also shows us how many Chinese people, how quickly people are using mobile devices to do finance, business, finance transactions. Peer-to-peer lending in China is also booming. We now have over 2,000 peer-to-peer, P2P lending platforms. 2,000, more than 2,000. We already had some problem with some of them. You can see the interest rate they paid on the chart on the right, 20%. So that's also very concerning to me. But on the other hand, I do think this is an innovation. I think the internet finance in China is just taking off because the underlying e-commerce is growing very fast, and I think the potential is still very big. The demand for online wealth management product is also going to be very high because Chinese people have so much savings. They are earning very small returns, like 2%, 3% returns in bank deposits. So they are chasing for yields. The competition is very fierce. The internet companies are entering this field, and also the traditional financial institutions are fighting back also very aggressively. But on the other hand, there's also a lot of cooperation You can see like internet companies are forming joint ventures with traditional financial institutions or acquiring a major stake in these companies. They are also forming strategic partnership. But lastly, I would say there are many issues to be addressed. Most importantly, the last 2 points I want to highlight is how high is the risk hidden in the rapid growth of internet finance, because this is such a new area, we do not have enough regulation, and how financial regulators should react to that. This is still in debate in China today. What I would say is that we should all keep an open mind toward this new phenomena, but also we should keep close eye on it. So I will stop here. Thank you very much.
Chen-Shi, we've got some terrific PowerPoints that have been part of this. Are those going to all be put online and be able to be viewed? Yeah, I assume these can all be put online and viewed? Yeah, so you will be able to, both the proceedings we've had today will be put on the website of the National Committee, and we will put these PowerPoints online, because I think there's some extremely valuable data there. So we will do that. We have some time for some questions, and I will use the moderator's prerogative and ask the first one. We have not talked enough about energy. I noticed, Lu Feng, you have, I think, built, I worked backwards, about a 3% RMB appreciation vis-a-vis the dollar built into your projection. Is that right?
Yeah, something like
about a 3%. Now, as China remains energy scarce and America enters kind of in about 2020 the energy surplus time, what's that going to mean for, and as China moves to a market rate for the RMB, what is that going to mean for RMB valuation? Normally, energy scarce countries have to import a lot of energy. It's pressure on their currency. And the energy surplus countries, which the United States will become in a decade, generally has appreciating pressure.
I think it's a very interesting issue. I think the energy consumption, prospects on energy consumption will influence exchange rate mainly through two channels. So one channel may be emphasize that China increase more coals, like our sponsor, they export coals to China, high quality coals to China. That will influence the international payments, and the balance. That will indirectly influence the exchange rate in the short term. But that kind of things has happened already, because now we face the situation, as we discussed, environmental pressures are mounting. So I think in future, the parameter of the energy consumption will change, in favor of more efficient use of energy. So that kind of factor are there, but has been there already for a long time to come. Secondly, I think if China more emphasized on the energy efficiency, that will also, how can I say, improve the function or productivity in China to encourage China industrial structure to upgrade. But of course, on the basis as the competitive advantage highlighted by Justin. Okay, so that kind of things, the productivity growth in relation to other countries is the funding, is the major driver in the long term for the RMB appreciation in my study.
Do you expect China to impose a carbon tax?
Everything is possible. I think Professor Zha Daojiong, our colleague, is expert on that, in the indoor, if you want to.
He's telling me he does not want to comment.
I think everything is possible, Yeah. Like the price, for example, recently they implemented a few days ago.
A cap and trade or a carbon tax? A carbon tax. So Qin Xiao is saying that there is discussion about imposition of a carbon tax in the future, which would lead to some form of rationalization of energy pricing. Let me open, I've got a lot of questions, but let me open the floor to some additional questions. Back, somebody very enthusiastically. Do we have a, there we are.
Yes, my name is Stephen Sachs, and one of the areas I'd like to address is the standardization of auditing standards, particularly for these Chinese companies that are now traded in North America with a market cap well in excess of $1 trillion. And I recognize that, quite frankly, you know, the last year there really haven't been any major blow-ups, but prior to that, you know, very frequently we heard, you know, fraud, you know, on public companies, and again, it all boils down to the auditing standards, and that's the question I'd like to address. Thank you.
Haizhou, you want to?
I guess muddy water is behind us. Thank you. That's it.
Muddy water is behind, in other words, the day of the audit scandal is behind us?
Largely.
It's a brief answer.
Please allow me, I want to ask 2 questions. One question is
only get one.
Okay.
A lot of people with their hands.
Then I limit to the first question regarding the outbound investment from China. As China grows, now the investment theme is become more and more, you know, 2 ways, and that's good for the world economy as so many companies, you know, in U.S. are being funded by the investment from China. Are we seeing further liberalization in terms of capital outflow from China? If yes, what we are going to see in the years ahead? Thank you.
Who would like to take that one?
Okay, I guess I can comment on that. Yes, indeed, China's and outbound FDI has been increasing very rapidly from very insignificant level 10 years ago to the year before last year, something like 80 billion US dollars. Maybe last year, maybe this year we're more than, you know, and 1,000 billion US dollars. It will be tremendous, you know, it's unpredictable, it's unbelievable, you know, 10 years ago. I think it's clear, you know, driving forces for that kind of rapid growth of outbound FDI multiples. You know, one thing is because, as emphasized by my colleagues in the last session, we have too much foreign exchange reserve because a lot of structural reasons. So now we want to diversify, you know, our investment in outside world. Secondly, we need a lot of resources. Thirdly, and because as emphasized by Justin as well in his presentation, you know, China, as the wage rate in China has been increasing in recent years, a lot of the labor-intensive activities or industries are transferred to other countries. Last year, you know, and this time we visited several, you know, African countries headed by Professor Justin Lin. You know, there's a very famous show enterprises called Huajian invested in Ethiopia, which has been attracted a lot of media coverage and also positive remarks or comments, you know, even by mainstream media in this country as well as in Europe. That is mainly driven by the changing competitive advantage, you know, in line with the relative very rapid growth of the wage rate. The wage rate in last year for the very ordinary workers has been increased to more than $400 US per month already. In the coming 10 years or 7 years, it's likely to, you know, and be higher than 1,000 US dollars. It's very difficult to maintain extremely heavy labor-intensive industries in China with 1,000 US dollars wage rate. So I think all these kind of things play a role to boost that kind of development. On the final point of that is that I think, yes, indeed, China still have selected capital controls, But in regard of the capital foreign investing outbound FDRs, the control is relatively limited. Also, it has been widely accepted in the policymakers, including PBOC, as well as SAFE. Regulation still remained in these areas, should be phased out very rapidly in near future.
Maybe I can add a few comments on the second part of your question, which is where the money will be going or will be coming. Certainly, China would like to acquire more technology as China climbs the value chain. Meanwhile, China will continue to need to import more commodities, including agricultural products. So I think that the U.S. would be a natural place for China to come. If U.S. would welcome us more, I think that we will hear answer from Ambassador here on this over the next few days.
One last question, since we haven't put one to Dr. Sun, which is how different is this shadow banking from the consumer finance business in the United States? You point to these enormous spreads, and similar enormous spreads exist in the United States for, if you borrow on your credit card, for instance, you're going to pay, 18, 19, 20% also. But it's the way that a lot of people can get access to credit. So we don't see that as a systemic risk. How should we think about that comparison?
Thank you very much for the question. I used to work for Capital One here. So actually, I lend money in the U.S. to consumers. I would say the difference is most of the activities in the shadow banking system is not for consumers. It's for infrastructure projects by the local governments, property projects, as well as mining projects, as well, and also some SME projects. They are all on the production side, I would say. One important difference is majority of these borrowing have very good collateral. The reason we charge high interest rate for credit card is because there is no collateral. It's credit, pure credit. But in China, for example, the property project, if you borrow the collateral, the value of the collateral got a 50% haircut. So in that sense, these borrowings should be very safe, but they are still paying very high interest rate. And in some sense, this high interest rate is forcing this project into problem. I give you one example. Before some regulation was introduced in 2011, some of these local government projects were borrowing at 7-8% from the banks. But after the regulation changed, they were forced to use trust loans, which charge them 13-15%. If you do the project, you have you can do the cash flow projection. You say this internal return, rate of return for this project is 10%. It's actually a viable project by borrowing from the formal banking system, but now it's going to be a problematic loan by borrowing from the shadow banking system. So I think that's a big issue.
I thank the three panelists and invite Yao Yang up to make his final remarks. Thank you so much.